Hello, students. Assalamu alaikum. How are you? Today we have to start with our A-levels AS structured paper of 2019, inshallah. Let's see your paper. So here's the paper. November 2019, paper 22, AS level. Bismillahirrahmanirrahim. Okay. R Limited provides the following information at 30th June 2018. An extract from the statement of financial position. 10% debenture, 75,000 inventory, other receivables, other payments. In receivables, we have only insurance, means this is prepaid insurance. And other payments, electricity expenses means accrued electricity expenses. Okay. Now extract from the schedule of non-current assets. Land and building cost, revaluation of land and building is done for 500,000. Accumulated depreciation till 30th June 2018 is given, and net book value of assets, fixture and fitting. Land and building, they don't depreciate, but they have revalued. Sorry. The company lost all its accounting record as a result of a computer virus, but was able to provide the following summary of receipts and payments from the year ended 30th June 2019. Now, this is the cash book summary. All the receipts and payments were through the bank. Okay. All sales and purchases were made on cash basis. Okay. Depreciation policy is given. Land and building, no depreciation. Fixture and fitting, 10% reducing balance method. And motor vehicle also 20% per annum reducing balance method. And these expenses are fixture and fitting is charged to administrative expense and motor vehicle is charged to distribution cost. Okay. Following information is also available 30th June 2019. Inventory was valued at 42,000, including damage inventory costing 5,000. This could be repaired at a cost of 450 and sold for 5,100. Okay. So this is concept of IS2. IS2 using IS2, no other cost right now. Insurance of 750 for the 3 months ended 31st July 2019 was outstanding. Electricity expenses include 600 for the 3 months ending 31st August 2019. Expenses are split as follows. Insurance is charged to administrative expense. Motor vehicles charged to distribution cost. Wages and salaries split between distribution cost and administrative expense in the ratio 4:1. Electricity expense charged to administrative expense. Prepare the income statement for the year ending 30th June 2019. Use the space on the next page to show your working. Okay. Now come to revenue. The revenue, there is nothing I think in the revenue because revenue is based on cash basis and all cash are deposited to bank. So the revenue is very simple, $286,000. Done. So let's start with the tools. Now come to cost of sales. We are given space for computing cost of sales. Okay. For computing cost of sales, what we have to do, we have to take opening inventory. Opening inventory. Opening inventory cost is 45,000. Then purchases is totally on cash basis. So purchase amount can be taken from your cash book. And it says $135,000. $135,000. What I forgot, I should place over here. Now, you have total available. Now, I'm taking the calculator. 45 plus 135, $180,000. The less closing inventory. Now, when we compute closing inventory, Closing inventory. Closing inventory, we have to work in closing inventory. See how. Inventory was valued at on 30th June 2019. The closing inventory was valued at 42,000. Okay. So first what we do, including damage inventory 5,000. First what we do, 42,000 minus 5,000. So 37,000 is your inventory in good position. Done. Now, what about this? This inventory, the NRV is 5,100. No, selling price is 5,100. Minus 450 is the repairing cost. So after repairing cost of 450, we can sell it for 5,100. So 5,100 minus 450, the NRV is 4,650. That should be included in your closing inventory with 37,000, the perfect inventory. And the answer is 41,650 is your closing inventory. Getting my point clear? So 41,650 is your closing inventory, and you get the amount of cost of sales here. CS is equal to 180,000 minus 41,650. The answer is 138,000. Done. So move to the table. Yes, we are here. The cost of sales 138,350, and that should be kept in the bracket. So we know we have to deduct it. Otherwise, we can make a mistake and we can add it. Now, gross profit. You can easily calculate gross profit over here. 286,000 minus 138,350. Answer is 147,650. Done? Okay. Now, here, one thing we can easily calculate is finance cost. How? See, what is the amount of debentures? 75,000. There is no change in the debentures from 30 June 2018 to 30 June 2019. It means we have not issued further debentures. So what we have to do, we have to just calculate the interest on debentures. So 75,000 multiplied by 10%. The answer is 7,500. That is something we can easily calculate. 7,500 finance cost. 7,500. Done? Okay. Now, finance cost 75,000 multiplied by 10% is equal to 7,500. Here you should be careful. In this question, debenture interest is paid during the year 3,750 from the cash records. Please do not include this amount. Calculate, in while computing net income, we have to calculate the interest which is due, 10%. Okay, not what we have paid, but due. Okay. Now come to administrative expense. What first thing you should do while answering this question? Write first all those items which are in administrative expense. Are you getting my? Okay. The first is depreciation of fixtures and fitting. Fixtures and fittings. This is included. Now see, what else? Now see. Fixture and fitting. Okay. And wages and salaries split between distribution cost and administrative expense. So it means we have to take wages and salaries in administrative expense and distribution both in the ratio 4:1. 4:1 means 4 plus 1, 5. So 1 upon 5th is going to be included from wages and salaries to administrative expense. There is no adjustment of wages and salaries. So what we do, just see what is wages and salaries. 45,000 multiply 1 upon 5. Now wages and salaries. Wages and salaries. That's right. Wages and salaries. 45,000 multiply by 1 upon 5. Got it? Okay. Other things we have to add. Other things we have to add is electricity expenses. Okay. Come to electricity expenses. Now, electricity expenses 2,700 we have paid. 2,700 we have paid. Okay. Then electricity accrued in expense at start is going to be subtracted 500. Okay. Then prepaid at the end of the year is going to be deducted. 600 for 3 months is prepaid. So we are in June, July and August. So 2 months is prepaid. 600 divided by 3 multiplied by 2 means 400. Minus 400. The answer is 1800. Getting my point here. So electricity expense, we have to include here maybe the salary is 9,000 and your electricity expenses include 2,200 minus 2,200 sorry, 2,700 minus 500 accrued at start minus prepaid at end. So we get electricity expense over here, which is 1,080. What else we have to include in administrative expense? What about insurance? Administrative, yes. The last one is insurance. Insurance, what has happening in insurance, we have to be very much careful. Now, insurance we paid 12,000 during the year. Now, insurance is prepaid at start minus 1,000. Is 11,000. And what about insurance at end? Accrued insurance for 3 months till July. So we have to include 2 months. That is 500. $12,000 plus 1,000 plus 500 is 30,000. This is your insurance. 12,000 paid plus prepaid at start 1,000 plus accrued at end. So the answer is 13,500. So what is left? Depreciation. So depreciation is how much on fixed depreciation on fixtures and fittings? How much we have to calculate depreciation? Fixtures and fittings, 75,000 cost minus 35,000 accumulated depreciation. 40,000 is the book value. We did not buy any additional fixtures and fittings during the year. So the 10% is 4,000. Got it? We have to add here. Okay. And I will show the working over here. This is 40,000. Right. Now total administrative expense now we have 4,000 plus 9,000 plus 1,800 plus 13,500. This is 28,300 is our total administrative expense. 28,300. Done? So 28,000. Got it? Now, distribution cost. Depreciation of motor vehicles. Okay. Now in motor vehicles, we have to be very much careful because we have bought new motor vehicles as well. So when we go here, see motor vehicles 200,000 minus 150, 150,000. Okay. 150,000. And we have purchased additional motor vehicles of 50,000. So we have to calculate depreciation on 200,000 multiplied by 20%. This is 40,000. Got it? This is 200,000 multiplied by 20% is equal to 40,000 is your depreciation. Now, after depreciation, what else we have to add in distribution? Motor vehicle expense. Okay. Motor vehicle expense, 10,000. There is no adjustment of motor vehicle expense. So they will be included directly in here. Motor vehicle expense, 10,000. Motor vehicle expense, 10,000. Done. What else we have to include in distribution cost? Oof. Wages and salaries 4:1, 4 upon 5. So wages and salaries were 45,000. $45,000 multiplied by 4 upon 5. So that would be 36,000. Done? Anything else? Wage service, electricity service, unit. I think. So the total of distribution cost is how much? 40 plus 10. uh, 40, 50, 86,000. Yeah? So we have solved this. So we can go back. This is 86,000. Now profit from operations. And see, 147,500 minus 28,300 minus 86,000. This is 33,200 is your profit from operations. 33,200 minus finance cost 7,500, 25,000. Minus 28,000 minus 86,000. Minus 7,500. Answer is 25,000. Done? Now it's complete. We've done all the workings. Now, state two differences between capital reserve and revenue. Okay. Now, capital reserve is just a calculation. It's just a calculation, and revenue reserve is basically it's a collection or setting aside revenues for some purpose. Now, capital reserve cannot be used for paying off any type of dividends or any type of liability, but revenue reserves can be used to pay off dividends or other liabilities or any other premiums, redemptions, all these things. Okay. Capital reserves cannot be distributed. Revenue reserves can be distributed. So there are so many differences there, but we have to mention two. Tax is available. If you want the tax, you can ask me, I'll give you no problem. R Limited is planning to acquire a new building at a cost of $500,000 to expand its business. Directors are considering two options to finance this acquisition: issue of shares, issue of a further debenture. Now, if you include issue of shares, both are sources of finance. But issue of shares does not require redemption. You don't need to pay back. But debentures need debentures one day after 5 years, 7 years, 10 years, you have to call for redemption. Now, ordinary shares, dividend on shares, it's up to your discretion. You pay or don't pay. But interest on debentures, you have to pay at any price. And they can sue a case against you if you don't pay the interest. But shareholders cannot go to court for having dividend. Okay, gotcha. Now, issue shares will increase your shareholders' equity. Debentures will increase your liability. And anyhow, equity, shareholders' equity or capital, increasing capital is 1,000 times better than having liability because you have to redeem, you have to pay. Okay. Now, Dividends are calculated after profit. Interest are calculated before profit. It's like an expense. Getting my point? So I think it's better, but in my opinion, not your opinion. In my opinion, you have to go for uh, option one, share issue. Okay. State one advantage and one disadvantage to a business of making all sales on cash basis. If you are making all sales on cash basis, there is no chance of bad debts. But you may lose customers, great customers. They will. Okay. If you buy purchases on cash basis, there is a chance. What is the advantage? The advantage is you can avail trade discount, cash discount, all you can enjoy discounts. Okay. But disadvantage, your cash is blocked in your purchase. Cash out. Now, question number 2. Diwali has provided the following information for the year ended 31st July 2019. Closing inventory, opening inventory, revenue, trade receivables, trade payables, cash sales 10% of total revenue, cash purchase 25% of total purchases, gross margin is 20%. Okay. Diwali's standard credit terms were both customer suppliers are 30 days. Industry's average turnover is 15 days. Calculate inventory turnover in days. When you have to compute inventory turnover in days, what you have to do, you have to write the formula first. Inventory turnover in days is equal to average inventory divided by cost of sales multiplied by 365. Multiplied by 365 days in a year. So average inventory in this question is very easy to calculate. Opening inventory plus closing inventory divided by 2. 50,000 opening inventory, 30,000 closing inventory divided by 2. 40,000 is your average inventory. So this is 40,000. Now cost of sales. See, gross margin is 20%. It means sale is 80% of the revenue. 750,000 multiplied by 80%. 600,000 is your cost of sales. Easy. So here 600,000 is your cost of sales. Multiply by 365. And you'll get the answer. 40,000 divided by 600,000 multiplied by 365. Answer is 24.3. It means 25 days. Done? And we secured 25 days. Trade receivable turnovers in days. Okay. Trade receivable in days. Trade receivable divided by net trade sales multiply by 360. Now, how much is trade receivable? It's given in the question. What is the amount of trade receivable? Trade receivable is 65,000. Now, net credit sales. Net credit sales. Net credit sales is 10% of total sales. No, so sorry, 90% of total sales. That's right. 90% of total sales. 750,000 multiplied by 90%. $675,000. So here you write $675,000 multiplied by 365. Now 65,000 divided by 675,000 multiplied by 365. Answer is 35.14 or almost 36 days. Done. Trade payables turnover in days. Trade payables turnover in days is equal to trade payables divided by net credit purchases multiply by 365. Yes. Done. Now, see what is the amount of trade payables. Trade payables is 31,850 and cash purchases are 20% of total purchases. You know, we don't have purchases in this question. So what we do, we know what is the amount of cost of sales. The amount of cost of sales we have already calculated. Yes, that is 600,000. Now, how to calculate purchases? 600,000 cost of sales plus ending inventory 50,000 minus opening inventory 30,000. So we get total purchases 620,000, out of which 25% is cash purchases, means 75% is your trade purchases, 465,000. So trade payables, what is the amount of trade payables? 31,850 divided by 465,000 multiply by 365. Now, answer is 31,850 divided by 465,000 multiplied by 365. Answer is 25 days. Done. Now, discuss the liquidity of Bali's business based on oil consumption. So if you see the total turnover, average industry's average turnover is 15 days, but the average turnover of Bali's is 25 days. So the inventory turnover is slow. Okay. And inventory turnover is slow. Receivable turnover is average 36 days. Now, 36 days means they are taking 6 days more to pay off. When the credit period is for 30 days, it means receivable turnover is also slow. What about payables turnover? Payables turnover is 25 days. If she is getting a discount within paying 30 days, if she's given a time of if her credit period for purchases is 30 days and she's paying 25 within 25 days and getting some discounts, then it's okay. Otherwise, this is also not a good situation. 3 drawbacks for a business of holding too much inventory. When a business holds too much inventory, the first of all is storage cost. Second problem is wear and tear, damages. And third is your money gets blocked in your purchases, or you have to worry about your credit period, your well cash discounts. That could. Achha. Now, it might be possible that some of your inventory might get out of date, obsolete, or theft. Oh, biggest problem, mashallah. In country like Pakistan, theft is the biggest problem. Okay, so you can write so many reasons over here. So I think this is the end of question 2. Okay, that's all for today. Inshallah, we'll discuss the remaining 2 questions of this paper tomorrow, inshallah. So take good care of yourself. Allah Hafiz. Please kindly subscribe my channel.